in the last 4 or 5 years. One of it is the enforcement of this act. The act has been there since 2003, and it just this January 1, 2003, just 2013, that the enforcement actually took effect. So what that means is that no insurance company, as we speak now, can actually issue an insurance contract without receiving insurance premium.
Let us break it down, the very, very basic. When you say premium, first of all, is it premium on all classes of insurance instruments or products, as it were? Okay. And the premium, is it the amount? Just break it down.
Okay.
Very, very simple.
What the Act says is that no class of insurance that is going to be issued, that is going to be enforced, that is going to be issued to any client, be it motor, fire, burglary, life insurance, premiums must be paid in advance before you have a valid insurance contract. So what that means is for those agencies, individuals, organizations that have prior to this time will have their insurance arranged or put in place, and they will be thinking of payments later. Payments will have to be in advance, or else they won't have the legal document which entitles them to claims payment until premiums are paid.
So if I'm hypothetically speaking, I'm a client, I have maybe my car got stolen, or I had a burglary incident at my house or the office or something, and if I haven't been paying my premium in what? Last payment or 2, 3 payments ago?
The truth of the matter is you won't even have the insurance certificate if your premium is not paid.
Okay, that would have been issued to me if I had paid the premium.
If you had paid your premium, and the evidence of the fact that you have a contract with your insurance company is the insurance certificate. So if you do not pay, you don't have an insurance certificate, so you're not entitled to a claim. You on your own will not even have the moral and the legal right to approach an insurance company to enforce your claim in case.
Why can't all of that be done right from the beginning? When the client goes to buy a certain, get a certain insurance cover, and then you make it part of the entire process as it's paying for the cover itself, it pays for.
No, but as we speak, that's why the enforcement of the Act from January 2001, January 1, 2013, it's a good way to go. It's the normal thing that should be happening, and it's been enforced as we speak. From January 1, 2013 this year, no insurance company issues document to any client without getting your premium. You understand what this means? So from inception, you already know, if you're going into an insurance contract, that this contract can only be valid if premiums are paid. So documents are not even issued unless premiums are paid.
Okay, so can we also say that right from that 2003 up until now, the insurance sector has lost so much money? I mean, if that had been implemented from 2003 to now,
that's true.
In terms of premium projections or targets or something, the industry would have perhaps been much better off, because we're still talking about capital, increasing capital base of, many of these insurance companies, many of them going insolvent and all of that.
Okay. So right from the time of the Act up to this point, a lot of insurance companies have actually had what I call, they've had receivables in terms of enforcing or putting in place an insurance contract for a client, and the client refusing to pay, whether private sector or public sector. So the issue had been that most of the insurance company had a lot of receivables that it's been termed as outstanding premium. So at the end of every year, it's usually a challenge when you're doing your audit for that year of your receivables, and that has been the concern of the industry for a long time, that how do we stop having so much receivables on a yearly basis. So this Act being enforced now is going to stop all of that. So what is going to happen, definitely there will be some market reactions. The market reactions will be for those organizations that are used to putting in place their insurances and paying later. They will either find a way of saying, you know what, let us take some insurances for now. The figures might reduce, but quality businesses will be done, because as the insurance is being put in place, premiums are being paid. Instead of writing 10 billion and having only 2 billion cash in your books, you will now write 5 billion and you have 5 billion cash in your books, which is better business.
That sounds tidy. Now, in terms of awareness, for insurance, your clients, how much of an awareness has perhaps the insurance companies themselves and NICOM? How much of that have you guys done?
The awareness is being pushed at all levels. The regulators are creating a lot of awareness. The practitioners are also creating a lot of awareness because the future of our market is retail. That's the insurance industry. As you have one-on-one interface with your clients, you have to educate your clients that before I go a step further in putting in place this insurance for you, payment has to be made. And also at the corporate level, for those that have intermediary, which are the brokers, by the way, within the insurance space, we have close to 600 insurance brokers as we speak. So as the brokers begin to interface with their clients, they educate their clients that, you know what, the style previously can no longer be, we can't continue at that level. The new act or the enforcement of the act is now in place. So documents can no longer be issued to you until premiums are paid. So enforcement is, awareness is going on at different levels, both at the regulator's part and also at the practitioner's angle.
Now, before this new enforcement, had there been any misunderstanding between operators and brokers over the non-remission of the brokerage commission?
Prior to this time, there had been supposedly some insinuation, let me use that word, of the fact that some brokers actually collect premium and they don't remit to insurance companies. But as we speak, the way the act is now, for all the practitioners, the insurance companies, which are the underwriters, the brokers, which are the middle, which are the agent, the brokers and the agents, who are supposed to be intermediary between the client and the insurance company, it's a new day and it's a good day for the insurance industry because both the practitioners, that's the brokers, the insurance companies, the regulators, everybody is now going to benefit from the enforcement of this act. The premiums will be paid to the brokers will remit the premiums to the insurance company, the brokers will have their own commission, and of course they will remit on the premium itself, and they will remit the balance to the insurance company. So as the insurance companies are getting their fees, the brokers are also getting their fees, other than the outstanding that exists before now, both at the brokers level and at the underwriters level.
Okay, so there was a time when the insurance companies, was there a time when they thought that perhaps the brokers had been collecting
money? That had been an issue prior to this time. The insurance company have always felt some brokers will collect this premium and don't remit it. But there's no reason for that. Like I said, I use the word insinuation, that some of those things cannot be proven. It's just like you're suspecting that could it be that this client has not paid? And when you have a broker on a transaction, it's likely that the insurance company don't have direct interface with that client. So you might not be able to ascertain that the client has paid the broker. But now, because of the enforcement of this act, the broker definitely, once the broker is placing the business with the insurance company, the broker will have collected the money, and I'm sure the insurance company will be expecting their own premium max 2 weeks from the time the policy has been effective.
Now, having a broker as a middleman, is that an ideal situation? I know some people approach insurance companies directly, some use brokers. How is it easier?
Well, for the profession, the brokers play a very vital role in an insurance contract. Their role is an intermediary role, but they are recognized by practice that they have to, how do I put it? They are like an independent consultant who ensures that the client is adequately covered and also speaks the same language with the insurance company in case there is disputes in terms of claims. So the brokers play a very vital role. For those clients that approach the insurance companies directly, I would not say they are doing anything illegal. You could approach the insurance company directly, but having to dwell or to lean on a broker is my candid advice. Okay,
so it's in terms of practice, that's the
ideal practice. Yeah, that's the ideal practice, that you go through a registered and authorized, licensed insurance broker.
No, because when one sees the commercials of some of these insurance firms, obviously one gets the impression that they're asking you to come directly to them. There's no talk, or there's no insinuation. Well, there's no indication that you can
come through a broker. Go through a broker. Well, the insurance company will advertise because their doors are open for business. If a broker brings the business, they're happy. If the client comes directly, they're happy. Okay. There's nothing by way of practice that is saying that a client cannot walk directly into an insurance company, but going through a broker is a more professional service that you're going to get and makes you more comfortable in terms of your placement of insurance.
Okay, still on this no premium, no cover policy, how have clients been receiving this?
Well, obviously, a whole lot of clients, for the insurance industry, both at the broker's level and also for the insurance company. It's a whole new world of opportunity. Let me put it that way. You can have your premiums come in on time. You can invest your premium. You can